Doug, you would ask me a question about the S&P 500, what it is and what I mean when I refer to it. Because usually I'm referring to the S&P E-minis, which is traded in the Globex. But often you'll hear the business media reporters talk about the S&P 500, and that's simply an index representing 500 of the most commonly traded stocks on the United States stock exchanges. There's the Dow 30, the Russell 1000, that's a small cap index, the Dow 30, large cap index, the NASDAQ, a technology index, and then the S&P 500, which people refer to quite often because it represents 500 of the bigger companies that are traded in the United States. So it's a good barometer of the health of the economy, and when it moves up and down, obviously it tells you how the stock market's doing. I most often am talking about the S&P futures contracts. They're called the E-minis. Now the difference here is that they're trying to predict the future of the S&P 500 index, and they're traded on the Globex, which is a computer that's located on the Chicago Mercantile Exchange, and it opens at 6 o'clock Eastern Time on Sundays when the Asian markets open, and it continues along until Friday at 4:15 at the close of the US markets. And it closes every day for 15 minutes between 4:15 and 4:30. That's it. And it's something that I pay close attention to, and the reason for that is because it's open 24 hours a day, and you can see how the American markets are going to be affected by things that are going on in the global economy. So if Asia is having a positive day, you're probably going to see an improvement in the E-minis. If things are going well in Germany, which opens about 2 o'clock Eastern Time, you'll see a similar reflection in the E-mini contracts until the sun goes across to London and then finally into the United States. Now the S&Ps, the E-mini contracts, you can trade those. They're worth $50 per point, and they're an excellent way for you to hedge your portfolio. So if you have a portfolio of long stocks that you're betting are going to go up in value, and you have a catastrophe like we had in Dubai, for example, a couple of months ago in the commercial real estate market, and you can see that that's happening at night, well, you take a short position on a contract in the E-mini future contract, which you can do off your trading platform. You have access to that. You can hedge your portfolio. So, because often when the cash market opens at 9:30, it's gapping down in a crisis. So there's no way for you to get out of those positions. But if you have access to trading the E-minis overnight, you're in a much better position to hedge your portfolio. So I keep track of them very carefully. As you can see behind me, I track the year open of the E-minis, which were 11/13/75. The February open 1070, the March open 1105. So these serve to me as reference numbers that I use. So I'm referencing the month opens, and they also have futures contracts for the NASDAQ minis and the Dow minis, and I got the year opens here as well. I also track the foreign markets on a daily basis. And I'm also creating a stock market frame every day. So I have support, resistance, and pivot numbers for the S&P E-minis. So like if the E-minis are trading above the pivot number, I'll interpret that as being bullish. So it's an opportunity possibly to get long in a stock. If it's trading below the pivot number, which I called 116 today, then I probably don't want to be buying, or I may want to lighten my positions, or I may want to be out of the market. For me, there's three positions. You can be long, short, or out. Out is a perfectly valid position to take, and it's the one I take most often. But with respect to international paper, when you hear me talk about the E-minis, I would use the E-minis as one of my indicators that would tell me whether or not I should be buying shares, selling shares, or staying out of international paper. And for example, here's how I would use it. A couple of days ago, the E-minis were trading at 113.75. They were up 80 points on that day, and which to me was bullish because the E-minis were retesting. They're coming up to retest the yearly open. Okay, so that's bullish. At the same time, the NASDAQ and the Dows were not, but it would be safe to expect, or the probability would be great to expect that they would challenge too. So we're probably going to go through 113.75. When the S&P is moving higher, usually that means about 70% of the equities trading that day are moving higher with it. And it's moving higher, in fact, because they are moving higher. So that's a bullish signal. Maybe you want to enter that trade. But if the market's already moved 80 points to get up to the year open, I'm thinking, well, how much more are they going to go? Probably not that much higher. So I might wait around for the next day until I get a pivot point that's we can break through that 113.75 number, and then I might enter international paper at that time. At least I'd put a check beside the box that represented the E-minis if it got through that number. So you'll often hear me refer to the E-minis. I use them in this way. I create support and resistance numbers, and I take notice of yearly opens, monthly opens, etc. to make that move. Okay, so I hope that explains it a little bit, and I'll move on to the next topic in a couple of days.